Thank you all for joining us today. Thanks for all of our attendees. Just a little bit of history on Kirkpatrick Management Company. Over the years, we've watched these webinars evolve and grow exponentially. Today, for example, we have over 100 participants registered, which is fantastic. For those of you new to us today, just a little bit of history. This is Kirkpatrick Management Company's 52nd year in business. KMC has been family owned and operated since 1973, still serving our first two original accounts, which we are very proud of. We are also proud to announce that we have been awarded the best workplace in the state of Indiana for 6 consecutive years, which is fantastic. My name is Kelly Quigley. I am our Director of Client Relations. A little bit about myself. I've been with KMC for nearly 5 years now and in the property management industry for nearly 20 years. I am the Director of Client Relations and I work directly with our board presidents to ensure you receive the highest service level. Most of you have received some sort of communication from me. I do check in periodically to ensure that your needs are being met. I also work directly with our board presidents on any issues or escalations. My primary goal here is to ensure that all of you are happy. A little bit about my experience. I have worked with managing townhomes and condominiums, large-scale HOA development properties, new developers, regional director positions. So to say the least, I've been a little busy for the past 2 decades. I also assist with our external education, so our KMC webinars, and I do help facilitate and host all of our roundtable events as well. So I will be sending out all of my contact information, a little bit of information about our division and the services that we offer to all of you within the next week or so. So keep your eye out in your email. You should be receiving that information. And without further ado, I'm going to turn it over to Dan Quigley, our Senior Vice President, to introduce our fabulous speakers for today's presentation.
Good afternoon. My name is Dan Quigley. I am the Senior Vice President of Kirkpatrick Management Company. So I'm in charge of all the associations, managers, and the team of people that we have every day that work for you. And so we're very proud of the work we do every day. We're joined today we've got 4 people from the accounting team that are going to be here today. There's going to be a lot of information coming your way. And so if you have questions, there is a box down there that has Q&A. There's answering those questions are going to be 2 of our all-stars from the accounting department, Colton West and Sarah Nowicki. Colton has been doing accounts receivable for us for a number of years, but he's been doing it, I guess 5 years he's been doing accounts receivable in this business. So he's going to be able to answer a lot of questions. He works daily with TJ on accounts receivable. Sarah Nowicki is on also. Sarah's been with our accounting department probably, I think she's over 10 years now, and are coming up on 10 years. She has done a little bit of everything in this job. She's done AP, AR, reporting, all the different things. So they'll be answering your questions and answers, and I'll also shoot some questions out from time to time to our panelists. TJ Inman he is our Director of Accounts Receivable. TJ's been with us just a little over 8 years. He is a wizard at the accounts receivable. He's very good with the the legalities of it, keeps our CAMs updated as far as status reports and things like that. It's a very important part of our department so that we keep money in your bank. TJ is an IU grad who still keeps his ties in with IU, but he still does his blog and his podcasting. He has a sports blogs and podcasts about the IU sports. Good year for IU football. He said, we're not going to talk about basketball right now. We'll pause and see if that gets better. There's always a tournament. So we'll go from there. Karla Thompson, I don't think I can say enough about Karla Thompson. She's coming up. She'll be 20 years with Kirkpatrick Management. She is kind of I would say, the Magic Johnson of our crew. She could play every position. She's done receivables. She's done payables. She has done reporting, and she is a great mentor to our team. But without her, I would be sunk. She is really she could do everything at this place, and she does everything at this place. And I think sometimes she wishes I would lose her number. It's not that easy, but she even spends a day in Greenwood to work with the Greenwood team. So she's just a great person to work with, and she's got your guys' back. She will always be there to answer questions from you. I have never had anybody tell me, "Hey, Karla didn't get back to me." Internally, externally, she's a machine. She does just a great job for us. So I will turn it over to Karla, let her talk a little bit. I will interrupt from time to time and get information or ask questions or clarify some stuff, but we'll turn it over to Karla. She'll do the beginning of the presentation, and then TJ will do the second half. So thank you all.
All right. Thank you very much, Dan. So we are here to talk about your financial statements. And we have an agenda just kind of breaking down the financial report and going over some items within it. Like Dan said, too, you will be receiving this presentation. And there also is a what we call our ABCs of financial reporting. And it's kind of like a board report put together, and it really breaks it down item by item and explains a lot of it. So you'll be able to see that, and hopefully I can help, in the long run to understand more. And again, here is myself and TJ. We are both, available via phone or email at any time. So the first part of your financial report is your balance sheet. And basically it has your assets and liabilities on it, and it's going to have your equity, which is your retained earnings, and your net income. Your balance sheet is basically a snapshot of what the association owns and basically what it owes at the end of each reporting period. Your cash accounts represent the actual balance that you would have at the bank. Actually, you can have a difference from the bank statement to the reconciliation due to outstanding checks, deposits, just a matter of other instances that can have a difference to it. On your bank statements as well, there's many different terms within your deposit area, and it'll say lockbox deposit. That is when people basically mail in their payments with their coupons, and it goes to our lockbox and it's presented there. You could have an image deposit, which basically is we are doing things in-house where we have maybe posted the payment to the actual ledger and we bank the deposit that way. You also have many other things that might say front steps payments, and that is basically your people going through the portal and doing ACH or credit card payments. On your balance sheet, you also have your accounts receivable, and that is basically the amount that the residents within the community, and that is what they owe the association. The accounts receivable on the balance sheet will agree to the accounts receivable aging report you get in your monthly financial. So on the balance sheet, if it's 10,000, it'll be 10,000 on your aged receivables. Also on the aged receivables report, it breaks it down by if someone is past due 30, 60, 90 days. It's also going to give you the status they're in, if they've received a late notice, if they are on the third reminder, if they are actually at the attorney. And I know TJ probably will touch base on some more of that as well. On your balance sheet, some properties may include fixed assets. There's not a lot of them that might have that information on there. But they could possibly have, because you have a clubhouse, large pieces of equipment, and so forth, and those may appear on your balance sheet. On your balance sheet as well, you will have accounts payable, and that would be if you had any outstanding bills at the end of the reporting period. Say you had some bills come in late in the month and they didn't get approved for payment. They could be sitting there on your aged payables. And then prepaid fees are another item that will show on your balance sheet. And basically, those are people that have prepaid their association dues in advance. They may have paid for the full year, a couple of quarters, a couple of months at a time. And it's really important to pay attention to that number, because that is money that you have already collected. You are not going to be collecting that in the future, and it is future dues. On your balance sheet as well, down towards the bottom of it, you will have your retained earnings. That is the culmination of all your earnings and losses since the formation of the association. This number only changes at the end of your calendar or fiscal year. A calendar obviously is January through December. A fiscal could be, February through January. Your net income is the actual year-to-date net income or loss that's reflected on your budget comparison, your operating and reserve statements. At the end of the calendar or fiscal year, that account, your net income, closes out to your retained earnings. And that way your retained earnings could go up or down just depending upon if you had income or if you had a loss. And this is just a diagram to kind of show you, we started, we ended 2018 with 100,000 in our retained earnings and our net income was 10,000. So the net income closed out and your retained earnings become 110,000. We do our accounting based on accrual, which means the association income is reported as what is being billed per your budget. That would agree to what the coupons have gone out to your members. We do that because accrual accounting, we are able to track your accounts receivable, and we are able to, monitor everyone's ledger balance at that time. If you have increases in AR and your accounts receivable, you could decrease your, it just depends on, I'm sorry, I have to move my thing. So increases in AR, you could have receivables going up, your cash could be decreasing because you're not collecting the money. So in accounting, actually, this has kind of changed a little bit due to the fact that your managers now are able to go into what we call our Avid Pay system, and they are paying invoices they could pay them weekly, they could pay them bi-weekly. It's just going to be up to the community association manager as when they go in and pay their dues. Every day we are processing utility bills, the insurance bills, any other time-sensitive bills are done in-house, and those are processed every single day. The managers go in, they review, and then they are able to post and pay them, like I said, daily, weekly, however they see fit on their schedule and how they can get the items paid. So when the bills are approved, they are posted into the accounting system as a payable. Now they are an expense on your budget comparison. So they go on once they're posted onto your budget. They will not, it's when it gets posted, it goes on, not when it gets paid. So that's important to realize that, if the check was cut and mailed, say in December, but if the invoice was posted in November, it's going to show on your budget comparison in November. So on your budget comparison, you will also find both your operating and your reserve accounts. That way we are able to track differently what you're processing through your operating and what you're processing through your reserve. Variance will show between what is actual and budgeted on your monthly and annual basis. And those are kind of important to pay attention to, because if you have a very large variance somewhere, you may want to get with your manager and have them investigate and see, were we really over budget in this line item, or did something get posted to the wrong line item? Because, you all budget at the beginning of the year, and, it just depends if the manager is on the same frequency as you as to thinking lawn care goes to the contract or does it go to mowing. Everyone has to be communicating together to make sure that everything gets posted correctly. We can always obviously move the items to a different general ledger if that's what you prefer. But, it's important to pay attention to the variances just to make sure things are getting posted correctly as to what you all had budgeted for the year. Remember too that your income is recorded when billed and expenses are recorded when the bills are posted. The budget comparison will show the net difference between your income and expenses for both the reserve and the operating. The two numbers added together should agree to your net income number that is on your balance sheet. And on that other report that you will be receiving, you'll be able to see a lot of this in detail, and it, will make more sense maybe than me just sitting here discussing it, but you will have something visual as well.
So
So,
Karla,
yeah,
can I talk for a second?
certainly.
So a lot of times some of the condo communities more than HOAs, but there's always a huge call for transparency. We know that you guys can get in and take a look at anything anytime you want. You can call up and ask TJ a question, ask Karla a question, ask your Cam a question. Sometimes the homeowners, Mrs. McGillicuddy down the street, doesn't want, she wants to know what's going on. She wants to see things. There are quite a few associations that will post on the Caliber portal something called owner financials, and they will put just the balance sheet and the budget comparison on there. That really answers all the questions you need because legally you can't put your bank statements on there. You can't put your accounts receivable on there, but that gives them a snapshot of everything that's going on. Maybe you do it once a quarter, maybe you do it, once a year, but they do see the budget at the end of the year when they vote on budgets and that kind of stuff. So a lot of times people will do it. Some people do it monthly. Some of the associations do it monthly. Some of them do it quarterly. And it's always just so if you get stopped on the corner and they say, hey, I don't know where my money goes. Well, you know what? You can get on the portal and see where it goes. So the first two things that she's talking about here really are just the ones that's something that's really just higher level that the homeowners can take a look at. They don't get to dig in deep where everything is going, but it still lets them take a look at stuff. So if you think about that, talk to your CAM about that. The customer service department can get that rolling and get that on there. But sometimes that helps with the transparency. Go ahead, Karla. Sorry about that.
No, you're fine. Some things to look for on your balance sheet are obviously, compare it to the prior month. Are your, balances increasing or decreasing? And what might be causing it? Did you have a big project that you had to pay for? Was there a lot of snow and you, didn't account for having so much snow removal to have to pay for? But it's important, just to monitor and pay attention to it. Your cash flow analysis is another thing that is included in your report. And you can have an increase in cash if your AR goes down because you've collected more money. You have an increase in your AP and you have an increase in your prepaids. And then vice versa, if your cash is going down, maybe your AR is going up. Maybe people aren't paying. You're not paying as many bills and, your prepaids are all getting accounted for. And in this, there is kind of a little flow that you can, if you'd like to try to do it yourself, if you want to kind of go through a cash flow analysis, this is to, to help you plug in your numbers. This is what you would need to do to be able to get your opening to your ending balance. Now, sometimes there may be something that might quite differ, and that could be just something that occurred after the fact that we would have to just reanalyze and look at to make sure you had all the information you needed. Your accounts receivable aging, some things you might want to look at, is it increasing over time? Is your cash flow keep going down, 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 and your residents aren't paying? Maybe then you need to get stricter with the notices or the people that, you are turning over to the attorney to get some payments in. And this is a lot that TJ will discuss in his portion of it. And then also, just make sure you're getting late fees. Are you charging late fees per your delinquency policy? We all have standards here where we know that, we don't waive late fees unless we get board approval. And, we have a system, a calendar they go through monthly, and they're putting on late fees and charges to everyone. So they do a very good job of making sure those are getting posted. But it is something to, look at as well. Looking at your check register. That is a good place to look to see where certain bills are being coded to. Because on the check register, it will label the general ledger code, which is your expense line item. And it tells you specifically on there where the items are being posted. So if you notice something right off the bat while looking at the check register, that's a great time to talk to your manager and say, hey, I noticed you put the landscape contract to common area. That's not where it should go. It needs to go here. And we can obviously get that corrected for you. It's a real good source to look at to see what all has been paid out for the month. On the budget comparison, again, looking at your expenses, looking at your budget. At the beginning of the year, it's crucial to look at the reports to make sure we have put on the budget according to what we received and what you all implemented. We do try to do the slant, if you ask for them, to have snow removal basically January, February, and November, December. Pool time is only during the summer. If you have 8 months of lawn care, it's only during the middle 8 months of the season. So we do try very hard to make sure we get those on as accurate as possible as what you've requested. But, we can always change it. We can always, we can't change the budget numbers, but we can obviously change the allocation of the line items. And, once again, looking at your variations, do you have, are you way under budget in something, or are you way over budget in a line item? Just, and it could depend on the timing of the year. Maybe you haven't gotten to a project yet and you budgeted for it, but it hasn't happened yet. And that could be an instance which, isn't going to be alarming or anything. Just keeping an eye on the big picture. Everyone has their day-to-day battles. Keep in mind, this is an entity that needs to move into the future. You have a fiduciary responsibility to preserve that entity. Find knowledgeable partners. It's the vendors you work with, your CAM, budget accurately and honestly, and you really want to try to avoid special assessments. Sometimes it's inevitable, but it's something, if you can budget more accurately, then you can avoid having special assessments. Monthly, you will receive a financial report, and it's basically based on all the activity in the prior month. Like I said, a fiscal or calendar year just depends. Fiscal would be, your odd months, like I said, February to January, and then your calendar is just January to December. If you had siding, say that was repaired during December and the association is a calendar year end, and the bill was received in January, in some instances, what we will do, depending if you are having an audit or not, we can move those invoices back into the prior year so they're not affecting your current budget. We have a timeline, I believe it's February 15th, that we will be saying, hey, have you received all of your invoices? And do you have your list of items you want accrued into the previous year? So that way we get all of those moved for you and that are not affecting your current budget. Because that can happen. Year-end things don't come through when they should. They're done late in the year. And so they do get paid the following year. If you're having an audit, the CPA, the audit firm, they automatically will take care of this. They give us the items and we go ahead and do the entries that need to happen. We have a lot of reserve accounts and what we call reserve transfers. And usually those are due to, it's a large project on the property. Say you're doing a big painting job, a carpentry job, anything like that. And we require a lot of documentation from your manager before we will pay the items. So basically on the reserve transfer, the community manager is going to sign off on it. Their regional manager is going to sign off on it. The board president has to sign off on it. And then finally, the accounting manager will sign off on it. We look for all the documentations to make sure they're in there. You have, insurance, W-9, lien waivers, the invoice, and the estimate if it's in there. Approval from the board. All of that information will be required with a reserve transfer. And that is basically, we just like to have all of the checks and balances for something that's going to be a large dollar amount that is coming out of your accounts. And basically just to make sure everyone is on the same page. again, the KMC Connect portal where Dan was talking, where you have your financials and everything. You all as board members have access to it. You have a little more access than the homeowner does, because of you seeing the financial reports, the delinquencies, the ledgers of the community. But here it just kind of gives you can actually also look at your invoices online. So you are able to see what all was paid out. And I know any of the CSRs are more than happy to work with anyone to get them signed up if they're not signed up. And you can, contact them and they will be more than happy here in the office to get you started if you're not on there. And that's it that I have.
So a couple things just to kind of not to sum up, but Karla and her team do a great job. There's no doubt about it. What we've got a lot of associations that we do a lot of work for. I don't have a degree in accounting, but I do look at financials all the time, do different stuff. One of the things, if you're on here and you are a member at large and you're not the treasurer, but you kind of want to help out, look at things. A couple things I look at just to make sure. The balance sheet to me means it's nice. I always like to see there's money in the bank. The budget comparison, you look at the variances and see if there's a huge variance someplace and maybe track that down. And the third sheet that I look would is always the check register, because listen, we have a lot of associations, and sometimes, some way, somewhere, we might put lakes of Johnson County to the lakes of JC County or something like that. There's a lot of names. There's a lot of lakes. There's a lot of villas. There's a lot of woods. And although your manager is checking things, it's kind of a team. It is a team effort. We need a little help sometimes on that, and you might see those things. So if you're helping out, or you just want to, I think the treasurer is going to be looking at AR heavy. They're going to be looking at, making sure the bank accounts are, who's paying, who's not paying. But I always like to look at the check register just to make sure, everything is going, the stuff that's coming. You can always change buckets. You can always change something from landscape improvements to landscape contracts. But we might have to, sometimes we just might make a mistake. And so kind of check on those things. Doesn't happen a lot, but it is something. If you're just kind of getting on there to look and see if it's something you can help out with, check that check register. And you're also going to see where things go and who you pay and who the vendors are, things like that. But that's the extent of my knowledge. That's why I have Karla around, because Karla knows that stuff. But go ahead and turn it over to TJ. We got a couple questions in the questions and answer. We usually get more during the accounts receivable, because a lot of people are passionate about collections and things, and you got a couple people on here that are passionate about it. So go ahead and turn it over to TJ. And thank you, Karla, for everything. Appreciate it.
Okay. Can everybody see my screen here? I don't know.
We cannot. I see thank you and questions from Karla right now.
Yeah, so it's still on that one. Okay. Share. Okay.
Now
There
you're
we go.
on.
Okay. So thank you, Dan. Thank you, Kelly. And thank you, Karla. I'm excited to be talking to you guys today about accounts receivable. A lot of information will be thrown at you. Please ask any questions. However, I do want to point out, if you have a specific delinquency in mind that you want to talk about, this is not the platform for that. For privacy reasons and for consideration of other people's time, we can't get into specific conversations about, the delinquency for a troubling account in your community. If you do have something you'd like to talk about specific to your community or one specific situation, please send us a message, send us an email, get with your property manager. We'd be happy to discuss that with you, at a different time. Let's leave this one for generic ones that we can discuss with everybody. Accounts receivable measures the money that homeowners owe to the association, condo or homeowners, for the services the association provides. When a homeowner purchases property within your HOA or your condo association, they enter into a binding contract to pay the dues that are charged. So from invoice generation to the posting of the payment that the owner makes, our AR team follows the best practices and whatever industry standards we can find to make sure that we ensure that the HOA or condo association minimizes the debt that's owed to them, which then, as Karla mentioned, maximizes cash flow available to you. Now, as we all know, there are times when those owners do not pay and collection agencies have to get involved for outstanding debts. We make sure that procedures are followed to protect the HOA, and we stay consistent to make sure the HOA's interests are protected with that collections firm. There we go. The dues amount for the year gets determined by the budget. Once that gets sent to the billing department, accounts receivable as well, their payment invoices get sent out. You might do those via email. Most of our associations are doing those via United States Postal Service. We get those to the homeowners in time for them to see any price increases, see their payment options, make sure that they get those invoices. Ideally, everyone gets them and everyone pays before the late date. We know some are not going to pay. There are some communities that have 100% payment, don't have to charge any late fees. That's awesome. We love that. You love that as board members. But sometimes owners don't pay. So it's critical to have a standard policy in place to handle the accounts that have any delinquencies. We call this the delinquency policy resolution or process resolution. 6 or 7 years ago, we consulted with Eads, Murray, and Pugh, which is one of the main collections firms that we use to create a standard template that they felt, they were the experts, they felt protected the HOA in the event that unpaid debt had to be collected in small claims court. The delinquency policy resolution is specifically quite generic, vague. We do not want to get too specific and then tie the HOA up in getting beat in court by a technicality. If we put that the HOA will send notices on the 1st of February and the 1st of March and the 11th of March, and we send a notice on the 3rd of February because we were, it's a weekend on the 1st of February, the owner may say, well, this says that they should have sent it on February 1st, but they sent it on February 3rd. Yeah, so we leave it generic, it's vague. However, it does provide information to the homeowner. This is accessible to homeowners if they'd like to see it, and we do provide this to the collections firms whenever we send an account to collections. So the specifics of this, you'll see it includes the due dates are set by the directors of the association. We don't give what that due date is on this sheet. It says that payments have to be received, not just postmarked by the due date. If the date that a community is late is the 31st of each month, and an owner sends a payment to us via the mail on the 30th, I can tell you we are not going to get that payment before it's late. They may have sent that on the 30th, but it's still late because it doesn't get to us until the 4th or the 5th of the month. So if the owner has not paid, this specifies the association is going to send out notices. In this particular case, shall send out 2 notices. It gives the association the ability to charge a late charge. This community is $20, but we would put whatever your association charges for the late fee. We could also leave it blank and just say a late fee will be charged according to the directors of the association. It also says that if the owner does not enter into an acceptable payment agreement or pay before all notices have been sent, the association may turn the matter over to the collections attorney. You don't have to, but this does give that option. It also specifies how payments are applied once we receive them. Attorney fees, court costs get paid first. The management fee or collection costs get paid second. Late charges, any NSFs or bounced checks get paid. And finally, those outstanding assessments. But that is when funds come in. So it specifies that as well. Those reminder notices that were mentioned in that policy resolution, KMC follows whatever policy the board wants. We leave that vague on there, but we're very specific with your particular policy and what we have in our accounting software that we follow and on our delinquency calendar. If you want two notices to go out, you want to give 15 days between the first and the second notice, and that second one is your final, and you want to give 10 days, that's fine. If you want to send out four notices for whatever reason, we can do that. The most common policy is three get sent. Okay, the owner gets 30 days after the first, 30 days after the second, and 10 days after that final notice. I'll show you examples of those templates and why they're a little bit different. And that final notice is the really important one because that's the last thing the owner's going to get before it might get sent to collections. The only part that I would really point out to you, if you want to change your delinquency setup, maybe you're not sure what it is, you want to talk to the accounting department or your property manager, consult them and see what it is. And then if you want to change it, we can do that, but you want to do it prior to another billing cycle. So we could institute a change now, and it would take effect with your next billing cycle. We don't want to do it in the middle of billing cycles. So for semi-annual communities, we could make a change now that would go into effect for July if that was communicated to homeowners, but you wouldn't want to do it as a monthly community. Hey, we're going to make a change effective in March. We wouldn't want to do it right in the middle of a billing cycle. So if you're not sure what your process is, ask us. We can tell you, ask your property manager. If they can't tell you, they'll come to us and we'll get that answer for you.
One thing, TJ,
Yes, sir.
one of the things, we try Rob Kirkpatrick wants us to, if the customer wants it on purple paper upside down, we're going to give it to you on purple paper upside down.
Sure.
But the AR sometimes is not able to use purple paper, and they're not able to print it upside down because they have to follow the governing documents of the association. So
Yeah.
there are times when we have had to change a semi-annual to an annual payment. There's times when we've had to do some different things. So yeah, kind of make sure that people are running this by TJ before you guys get too deep into bringing it up to the town hall or something. Run it
Right.
by TJ, run it by your manager, and make sure it's something you guys can do because even if you're a monthly payment at a condo and somebody wants to pay in full, we'll work our way around that. But kind of just make sure that what these guys are doing, these guys are going to keep you legal. They're going to
Right.
make sure that if you do go to court, you're able to collect at court because we want to make sure that everything's above board. So
Exactly. Yeah, it's a
yeah,
great point that we
TJ.
will make changes and do the policy as much as we can within the legal restrictions. So we are bound by federal regulation that prevents us from doing some things, and it is also for the board's protection that we stay within those regulations. As Dan mentioned, if it goes in front of a judge, the judge wants to make sure that we followed everything to a T. And if we don't, you could be, lost out on legal fees. And instead of the owner being responsible for those, it becomes the HOA. Our goal is to make sure that that never happens. And we do a really good job of it. I don't want to toot our own horn too much, but I've been here almost a decade and I cannot think of any situations that Kirkpatrick management was responsible for something not being followed and a judge awarding a homeowner because of that. So we take that very seriously. Uh, the templates here. So our notices are sent out on a template. Uh, the first and second are different than the final, and you'll see that here in the language. It's a friendly reminder that your account is past due in the amount of whatever that balance is. It gives them directions where they can send the payments, to contact us if they have any questions, if they need to make a payment arrangement. Gives them their different options. It will always include the client's name, the association. It will always include the specific homeowner. Ideally, go to the right mailing address with the account number. That's all on the first and second notice template. Look at the final notice. You see that typeface there is a little bit bolder. The language in the letter itself is a little bit more aggressive. It switches the language from past due to delinquent, and then lets them know, as a reminder, your association has the right to seek legal remedies against any owner whose account is in arrears. And then here's the major difference. It gives them a specific timeline. That final notice gives them 10 days from the date of the letter, and if they do not comply, it may result in legal action. Again, this letter does not bind the association. Oh, we sent the final notice. We have to send them to collections. But once that 10 days is up, it is now an option if that is what the board chooses to do. And again, it spells out, hey, this is serious. If legal action is taken, these court costs, these legal fees, the $75 case management fee that we charge for the extra work on those accounts, that all becomes the responsibility of the owner. But again, it does give them that contact us for more information, make a pay plan, discuss a problem, let us know. And on those pay plans, we try to stick to 3 months or fewer. Anything beyond that does require board approval. And if you're a board that would like to approve any payment plan that gets made, even one as simple as, hey, it's February, the owner let us know that they're going to have the account paid in full at the end of March. If you'd like to approve any payment plan, 1 month, 2 months, any of that, let your property manager know. We do have a list that we stick to that if we get a call on one of those communities, it goes straight to the board. We don't approve anything without your approval. So let us know. But those are options for homeowners to try and get it paid. This is just your, Karla mentioned this, an AR aging report. The things to really look out for would be the balance and the status. So the status is where that account is in the collections process. See, these two, the second and third accounts, they're at first notice status. So they've been sent a first notice. This one is at collections approval. Mickey probably needs to go to the clubhouse, get his checkbook, get that paid. He's ignored the final notice. That 10 days has expired. It's now at collections approval, which means the board now has the choice to send it to collections. So what happens if those notices don't work? The 10-day period has passed. There's been no payment. They have not gotten into a payment plan. The CAM gets notified that one or more accounts within one of their communities is eligible for collections. We send them a list of that. It'll either be in an email or a spreadsheet that's attached to an email. The CAM will then notify the board and ask for approval to proceed. Very important point, KMC will not make that choice for you. We will not send an account to collections without your approval. This is 100% the board's approval is required. These are your neighbors. It's your community. It's important that you make that call. We want to give you as much information as possible and let you feel confident that the processes that you asked for have been followed. So once it gets in front of you, as this is ready for your approval, you can be confident, yes, those notices were sent, the proper procedures were followed, and if this goes to collections, we know that all of those T's have been crossed, the I's have been dotted, and we have followed exactly what you asked for. Now, you do have options at that point beyond just collections. We can send another final notice if you'd like to. We can do nothing for now and wait until that next billing cycle, give the owner more time and see if they pay by that time. Or we can proceed with collections. So you're not forced in anything, but that is the point where you can make that decision. It'll go to a collections attorney if you approve that. The collections attorney will be your choice. We use Eads, Murray, and Pugh or Thrasher, Bushman, and Vocal most consistently. So they will send out a demand letter after verifying that we've sent the notices. We give them those copies, verifying that we have the proper owner according to the deed, that we mailed them to the right place. They will verify that everything was done correctly. And once they have verified that, they will send out a demand letter that gives the owner a breakdown of what it is that they owe, why they owe it, and that gives them 45 days to get that paid. They still can get into a pay plan with the attorney. They can dispute the debt. They can contact the attorney for options. Once those 45 days passes, if nothing has been accomplished, no payment's been made, no pay plan's been made, the collections attorney will send an affidavit of debt to our AR department. We fill it out, and the collections attorney files in court and awaits a hearing date. Now, up until that hearing date, the owner can still make a payment, get into a payment plan right up until that hearing date day. If a hearing does occur and the HOA gets a judgment, the owner then has 30 more days to pay the judgment. If they fail to do so, or again, fail to get into a pay plan, the collections attorney does have the ability to then file to garnish wages. Now, HOAs can take up to 25% of take-home pay with a judgment in place. There are situations, of course, that you can't garnish wages. Maybe somebody's retired and you cannot garnish Social Security. It could be the instance where a business, some of your communities have, American Homes for Rent or other businesses that own property within your community and rent those out. We cannot garnish the wages of a business. So in those instances, we do have other options. It's not the only path. A lien is an option. So you can place a lien on the property. Typically, you're looking at 225, 250. Once that lien is prepared, that does get included in the owner's debt to the association. Now, the lien also opens the door for a lien foreclosure. The lien has to come first. Condos can then foreclose immediately after filing a lien. HOAs have to wait 90 days before they can foreclose. Foreclosure, typically, you're looking at that as a last resort. It's a serious process, not usually advised until the account balance exceeds $2,000 because of its serious nature, because it's lengthy, it is expensive. I've listed out these charges here. Add them together, and you're looking at $2,500 to $3,000 plus a time range of 6 to 9 months. You could get those funds back if there are surplus proceeds from the sheriff's sale, but you might not. You do have to be prepared as an association to have that be debt that has to get written off. So
TJ,
it's a
that's a
serious
very,
decision.
I like that. That's a very good sheet. That the one with all the breakdown of the money. I had not seen that one before. I like that.
Yeah, Dan knows it rarely goes exactly according to plan when you go down that route. I think it is wise to be prepared that the funds that owner owes are completely written off and you don't get a dollar of it.
So can I'm gonna butt in again, TJ.
Yep.
Sorry, you're used to this, I guess, though. We've got one of the things that you'll see that is not on TJ's presentation. There's a couple different things. Number one, there is not a procedure where you go and knock on these people's door and ask them for money. There is not a procedure where your CAM goes and knocks on the door, and there's not a procedure where we call them and say, "Hey, this is Kirkpatrick Management. You owe us this amount of money." Now, a homeowner can always call us. We're very good about that, but this is not. This process works. It's a very good process. We do not want homeowners or managers going to knock on people's doors or trying to make something that has happened in the past, which is very tricky and can happen, is if you're out walking the neighborhood, which you all have to do, and that's the hard part about being an HOA board member, and Mrs. McGillicuddy comes by and says, "Listen, I'd like to make a payments and I want to do this." Don't make any payment details. Have them call
Yep.
TJ, have them call the office. We'll be happy to do that and run it by the board. We really want you guys to do, the board members to do the day-to-day business. Let us, your management, what you're asking for as far as the all these collections, everything TJ's talked for is taken out of your management fee, except for one. When we do file, we do get a little bit of extra money. I think it's $75 when we
Yes.
file it for collections. Other than that, those first three collections letters, any talks with the homeowners, any negotiations, things like that, that's covered. You're not paying any more for that. Let us do our job. We'll let you enjoy your neighborhood. But I just want to make sure you know that that's even if you know the people, just you can kind of stay out of that and let our guys do their job.
Yep. Um, so on the lien foreclosure, you might, if your community hasn't gone through one before, and you see those costs, and you're thinking, why would an HOA go down that path? And I say last resort because I truly believe that. Now, it can be quite effective. If you have a homeowner that just hasn't taken the process seriously, they have not taken the reminder notices seriously, they have not taken getting turned over to a collections attorney seriously. Once they get a intent to foreclose letter, if they're going to take it seriously, that is the point where the switch flips and it's, oh, I need to get this paid, and they find the money. Uh, there are also instances where that owner just does not have it. They do not have the money. It could be any number of reasons why that occurs, but the outcome is they don't have it. They cannot stop the process because they don't have anything to provide to you in terms of repayment. In that case, every other option has failed. At worst, you do go through that process and then get a new owner, ideally one that pays dues in the property. So think of it in terms of a cutting your losses before the balance owed escalates to extremes. Um, there are also instances where a property, the dues aren't being paid, but in addition, the property's not being taken care of either. So it's dragging property values down. So there are instances where a lien foreclosure ends up being necessary, but that's when you want to use it, is when it's determined to be necessary, because there are those other levers you can pull prior to that. So reminders on this, you want to have that documented, established collections policy. If you're not sure if you have one, you should, and contact your property manager to make sure that you've got one in place. And if not, we'll help you get one. You want to be consistent. This is so important. You need to treat every account the same, and that's something Dan was just talking about. If you make a payment plan with, Mr. and Mrs. Smith because you know that they had some car problems and therefore could not get their first quarter dues paid, okay, that's fine. We can do that. Certainly, it's great to have, some compassion for your neighbors and for homeowners when the situation arises. However, if you grant a payment plan of 6 months to Mr. and Mrs. Smith, and then Mr. and Mrs. Johnson come to you and say, "Hey, um, with the HVAC system broke down. We can't get the dues paid. Uh, you know, we heard that Mr. and Mrs. Smith got an 6 month pay plan. We'd like the same." Well, you kind of have to treat them the exact same way. So it's a slippery slope when you begin allowing things for somebody and then do not allow it for others. And that opens up a real can of worms. If that becomes public knowledge, um, that's going to be an issue. Uh, the HOA cannot make a homeowner pay his or her dues. What we can do is follow the procedures that we have in place here at KMC in the accounts receivable department. We can follow the right processes, do everything within our power to make sure that a homeowner knows how to pay, knows what the bill is, and has every opportunity to make the payment, but we can't force them to do it. And when they don't, we do have these options we can turn to. The removal of privileges and amenities is one, of course, for non-payment. We can go the collections route. We can get a judgment. We can garnish wages. And if we have to, we can go with the lien and ultimately foreclosure. Uh, Collecting money, talking about money with your neighbors, never anybody's favorite task. However, homeowners have a contractual responsibility when they purchased a property to pay their fees on time. That's part of being a part of the association. It's your job as board members to collect those fees, do what we can to collect them on a consistent basis for the good of the entire community and those that do pay. That's our current accounts receivable team, Justin Kersey in closing, uh, Colton West, Vicky, and there's a picture of me, probably roughly a decade ago, and feels like 20 years.
You look so young and innocent at that point.
I was, Dan. I was.
We've taken that from you, I think. So yeah.
Yeah.
I think that does it for us today. TJ, you've
Yes, sir.
okay. Thank you guys both. Thank you, Karla and TJ, very much. Kelly, I appreciate it. Colton, Sarah, and then also Alyssa for putting this together. We appreciate everything, and Diane Arnett, who helps us organize things. Once again, my name is Dan Quigley. I am going to give you my phone number because if something comes up and you can't get your manager, or you can't get something that you can't get it done. Last year we had one of the people on one of these chats. They had a fire at their condominium association. They thought their manager should be going a little bit faster. So guess what? My phone rang, and we took care of it and got rolling on that thing right away. So we want to make sure, my job is to make sure your job is getting taken care of, and you people are backing you up. My cell phone number, 317-847-0016. I'm better at text than I am at phone calls. I will always call you back, but I would text first. I seem to get a lot of spam these days. I don't know what's going on. Maybe my age, they think that that's a good time for me to join AARP or something. I'm not 100% sure what's going on there, but yeah, text me first and I'll give you a call back. Call the office anytime, ask for me, but I work for you. We all work for you. We have somebody here 9 to 5 answering phones every day of the week, Monday through Friday anyway, sorry. And we always have emergency calls on the weekend. Thank you all for your time. We will send out some information later on this week, probably tomorrow or Monday. We'll have information out on the slideshows as well as the recordings, and then we'll tell you what's coming up next. I believe next we have a couple roundtables for board presidents, and then we have we have 2 more webinars, at least maybe 3 more webinars the rest of the year, where we're gonna help you help your neighborhood. Appreciate everyone. Have a good afternoon, and talk to you all soon. Thank you.